Housing sales rose 68% in value terms to 1.1 lakh crore during the January to March period across major cities on higher volumes as well as price appreciation. Now, according to a PropTiger report, housing sales in value terms rose to about 1,10,000 crore rupees in January to March period of the calendar year from 66,000 crore rupees in a year ago period. Now, major cities like Mumbai, Hyderabad, Delhi-NCR, Pune collectively accounted for 76% of the total transaction value of the 1.1 lakh crore rupees. Why are people buying more homes and what are the demographics from which people are buying more homes? To discuss that, let's quickly talk to Abhinav, Head of Research, India Middle East. Also with me is Kartik Malhotra. Kartik, hi. Housing sales seem to be picking up at the moment with more and more people, of course, buying more homes. The numbers are up about 76%. What's happening here?
It's very difficult to actually fathom what is happening here, Shweta, simply because, we are right now in a time where interest rates are high, significantly high. You haven't really seen, any sort of, blip in rates of interest for the last almost 1.5 years or so now, since February last year. Add to that all other indices, whether you look at Sensex, which is at 75,000, or you look at even, gold, which is at about 71,000 rupees. You're in an investment cycle where any sort of asset that you want to own seems to be very highly priced. And look at prices. It's not just the fact that the sales are growing. It's also prices which are growing, and usually the typical demand-supply equilibrium tells you that at a time when prices are high, sales should dip, and only when prices go down should sales increase. But it seems like the property market is pretty much defying all these economic rationales, and even with prices rising, sales are matching up to the rising prices.
Absolutely. And why is that happening? Why is it really defying the common market economics that we see on the usual? Let's discuss that. Joining us is Abhinav Joshi. He's the Head Research, India, Middle East and North of Africa, CBRE. Abhinav, if you can hear me, what are we making of the housing sales and the pickup that we are seeing, more than 50% in the last 1 year itself? Are these first, there are lots of questions I want to ask you, but let's begin by asking you, why are people buying more homes? Are these first-time home buyers? Are these people looking to find a roof over their head? Or are these people looking to buy second or third home and therefore making an investment into real estate?
Well, thank you, Ms. Shweta, for inviting me on your platform. The residential market has been in a state of buoyancy for the last 3 years. And that's largely because, we need to understand, we need to go back a couple of years ago, pre-pandemic or pre-2020, the market was in a consolidation phase. And there was a fair bit of capital, a fair bit of end user plus investor interest, which had dried up. That was because of the vicious cycle we were seeing in a couple of markets where projects were delayed, not delivered, capital values had gone haywire, and the entire sector was in a state of, I would say, policy churn, where there was a lot of push from this government on transparency, through the introduction of RERA and a couple of other measures. What's happened post-COVID is that all of this put together, it's like a perfect overlap that's happened, along with, of course, the monetary policy incentives and the incentives offered by the developer community. So the sales really picked up. The momentum has not been impacted, if you look at the macro level, it's not been impacted by the monetary policy stance taken by the central bank in 2022 and 23, where rates went up by 250 pips. But if you actually go beneath the surface, then in the mid-end and as well as the affordable or the low-cost housing segment, as per data from CBRE, growth has either slowed down. There seems to be some amount of weakness. It's not really coming to the surface. And that's because we're seeing a phenomenal expansion in upper mid-end. We're seeing a very sharp growth in the high-end segment and the premium and luxury segment. And because of capital value appreciation, the segmentation between mid-end and high-end has also sort of blurred to a large extent. What we also need to understand is that while capital values have gone up for sure in the last 2 to 3 years, your rents have also gone up. So, as large chunk of employee base came back into the major cities in 2021 and 2022, what they encountered was a steep jump in rentals and, landlord expectations, rents going up anywhere from 30 to 50% to as high as 70% to even doubling or more than doubling in some of the prime locations. Now, the gap as a result of that, the gap between rents as well as EMIs, which always used to be in favor of rents, has either narrowed or it's actually gone in the favor of having an EMI and, buying a house. That's another major factor. And the fact that I think this is an overall faith in the economy, overall faith in the political setup, the fact that things will continue to improve and we will do relatively better. It's a more transparent market. And the fact that there is genuine end user demand.
Abhinav, hi, good morning. Kartik here, and thanks for joining us this morning. So there are rumors in the real estate brokerage community right now, at least, which suggest that the market is overheated, especially in North India, and there are chances that there could be a bubble, artificial bubble, which has something to do with elections. Do you see a correlation between property prices rising and election season, or are these just rumors and they should be quashed?
Well, definitely before the elections, we do see an action in the market. But I would, rather like to focus on what is the unsold inventory at a pan-India level, because we are just talking about macro numbers. If you look at all the major cities, unsold inventory levels in the last 4 years have actually gone down. And they are at a decadal low in some of the micro markets. That's the sweet spot we need to look at. If your unsold inventory will remain contained, developers can still be, I would say, can still raise their pricing expectation and fresh demand will continue to come. If your unsold inventory moves up, the moment your unsold inventory starts to go up and the market starts to see an overhang situation, that's when we can, probably correlate it with the, capital value appreciation and say that, look, it looks like a bubble. But if I look at the first quarter 2024 numbers on unsold inventory, they're still much lower than where we were 5 years ago.
Okay, and where do you see this trend growing, Abhinav? Are you expecting, whether a bubble or not, obviously time will tell, but do you see prices continuing to rise in the foreseeable future, or do you anticipate there could possibly be some correction after elections?
Well, I don't think so. We're looking at a correction, but I think there could be a slowdown in the pace at which these prices were growing. We saw a very sharp jump in the second half of 2021 and then 2022 specifically. But even in 2023, when we were expecting this momentum to slow down, in select locations, prices did go up. What's also very interesting is that, we're seeing the completion of these large infrastructure projects in some of these leading cities. These are big signature projects, whether it's the Atal Setu or whether it's the Dwarka Expressway, and then you have upcoming airports, etc. So, as a result of that, what happens is that price rise in such peripheries becomes very irrational. So it becomes very tough to sort of estimate that, if your prices went up by 10, 15% last year, then they have to go down, they have to go up by only 5, 7% in 2024. There could be select locations, as I said, some of the peripheral locations where infrastructure might go up, where a large tier one developer might come up with large projects, which might push up the pricing again. But yes, if you look at the overall market, we do expect that overall quantum of sales and supply might be very similar or range bound as 2023. But because of the high base in capital values, your growth in capital values might slow down.
All right, and before I let you go, Abhinav, one of the questions, of course, that a lot of people have at this point, people who are looking to buy homes and the kind of premiumization that we've seen in the markets, is who exactly are buying these homes? Do we have some idea of the demographics of the people, the buyers, what income groups they belong to, what areas are they coming from, who are they, what is their profession like?
Well, if you look at the larger segmentation, it's obviously dominated by the millennials. So late 20s to early 40s, and it's a wide group, because that's the group that has spent a couple of years working, whether in the industry or whether in corporate setup or in government, etc., or in the business community, where they have the paying capacity and where they want to move out of maybe their parental homes. So that's the segment that's dominating. But we are also seeing a lot of demand coming from the younger demographic. Younger, I would say, would be early to mid 20s. People who've just joined the job market, who feel that, who've seen or have experienced the volatility of the rental housing market in the last 3-4 years, especially post-COVID, who feel maybe investing or deploying capital in purchasing a house is a wise decision. Now, whether they have done their enough due diligence on that is a very different point altogether. But I think the younger demographic is driving it, millennials are driving it. Of course, you have the traditional demand coming from Gen X. And these are people employed in the technology sector. These are people employed in banking, financial services. These are people employed in the global capability centers, which as a sector is expanding in a big way. These are people employed in consulting, research, manufacturing industries, even government for that matter. So it's a diverse set, but largely dominated by millennials.
For those of us in media, not the best paid out there, Abhinav, final advice to folks watching and even producing this show, for those who may have missed this bus of investing in a house and find valuations to be too high, then purely from an investment, if not from a living point of view, from an investment point of view, which seem to be the cities, the hubs, the pockets, which are finding a better value right now and likely to grow in coming years?
I would put my bets on Bangalore.
Okay.
Even though there is an infrastructure situation over there.
But you think Bangalore is not overheated as yet? Bangalore is not commanding the kind of values which could be obnoxiously high?
No, I mean, it is definitely commanding values. But if you look at the way its commercial sector is expanding, just for your information, it's now the biggest office leasing market in Asia Pacific.
Right.
So some of its peripheries, especially in North Bangalore, are seeing a lot of development. So there is growth opportunity over there. Pune would be my other bet. Even though we've seen a large number of launches over there, the overall urban periphery of Pune is expanding in a big way. And there is a lot of demand coming from not just Mumbai, but other parts of India also, as more and more corporates expand in Mumbai, in Pune, and its business base expands. And of course, then, the political capital, I would primarily say the peripheries of Gurugram and Noida. And of course, the peripheries of Mumbai are, very safe bets as well.
All right. Very interesting highlights coming in there from Abhinav. If you're looking to invest and using real estate as a vehicle for investment, look at Bengaluru, Pune, Delhi-NCR. And the people who are actually buying home, very surprisingly, are millennials, people between 20 to 40 years old. Abhinav, thank you very much for joining in this morning. Thank you for sharing your thoughts on India's booming real estate market.